The Schwab US Dividend Equity ETF is a well-diversified vehicle for not only passive income, but also an investment tool that offers capital appreciation in a well-balanced portfolio. The ETF focuses on dividend-paying stocks that have historically also raised their dividends quite frequently, which gives SCHD a massive dividend growth rate. In this video, we are going to do a deep dive into one of my favorite dividend growth ETFs as a long-term dividend investor, and share one of the secrets to SCHD's long-term success that many investors seem to overlook. Now stay tuned because we have a lot to go over. SCHD is an ETF that's overweight in large cap US stocks, which essentially makes the ETF a bet on the largest companies in the United States of America. So for investors that are willing to bet against SCHD are sort of in turn betting against America. The Schwab Fund managed $49.8 billion in net assets, which just proves that a lot of investors are going to be in. And this is of course because the fund has a convincing long-term investment record. Now since the inception of SCHD back in October 2011, the ETF has achieved an average annual return rate of around 12 or 13%, and in over 10-year period, very closely matched the return of the Dow Jones US 100 index, which is of course the benchmark index that SCHD tracks. Now SCHD posted an annual average return of around 11.71% on a net asset value basis, while the Dow Jones US Dividend 100 achieved an annualized return of a tiny bit more at 11.81%. But a few more very important facts before we move on any further. SCHD's expense ratio is just 0.06%, which is a very cheap cost to own a very high quality ETF like this, in my humble opinion. The dividend frequency is of course quarterly, and the trailing 12-month as of now is around $2.60. Dividend growth investors as of today can lock in a nice decent starting dividend yield when it comes to the SCHD ETF of around 3.57% more or less. Now you might be saying, well, that's not necessarily all that high of a starting dividend yield, but the real magic is here. The real magic is the dividend growth that SCHD has. So dividend growth rate is a measure that indicates the annual rate at which a company's dividend payments have increased over a specific period of time. It represents the compounded annual growth rate, or CAGR, C-A-G-R, of dividends over that period. And the dividend growth rate is often expressed as a percentage. Now, if you were to calculate the dividend growth rate, you would typically take the difference between the final dividend payment and the initial dividend payment, divided by the initial dividend payment, and then divide that result by the number of years in the period. And finally, the result is expressed as a percentage. And to be more specific, looking at the SCHD's dividend growth historically, back since 2013, there was an 11% increase in annual dividend payout. The next year, a 15% increase in annual dividend payouts. The next year after that, 9.5%, 9.7%, 6.9%, 6.9%, then 19, 17, 10, and then as of recent last year, 13.9% of annual payout growth. Now this is really significant to me because looking back in history, and keep in mind, just because a stock or ETF did something historically does not necessarily mean that it's going to continue to do so, but this is just basing it off of history. Back in 2014, 2013, around 10 years ago, the Schwab US Dividend Equity ETF was paying around 25 cents or so per share per quarter. Now 10 years later, around 65, 66, or even 70 cents per share per quarter. Now the difference in dividend payouts over the last 10 years is almost 3 times as much as you would be getting around 10 years ago. Now, one of the main reasons on why I think it's worth betting on SCHD as a long-term dividend growth investor is because of the diversification. SCHD is a well-diversified ETF and has exposure to many different industries. The majority of investments have been made up in the industrial sector, and the next biggest categories are things like healthcare and financials. The majority of sectors in SCHD are pro-cyclical, meaning that the profits of the underlying industries typically expand when the economy expands. Now, before we dig a little bit deeper into what I think most SCHD investors might be overlooking, let's be honest and talk about some of the risks associated with SCHD moving forward. So like we were saying earlier, SCHD is basically an ETF that's betting on America because of the companies that are within the ETF. Now this of course means that a recession would probably lead to a decline in many different industries and probably many of the different stocks within the ETF. But with the recent data that's been coming out about the US economy and the recent growth of the US economy, it's still unsure exactly what type of recession could be ahead, and of course how that's exactly going to affect the equities within the SCHD ETF. Now of course, because SCHD ETF does track the Dow Jones US Dividend 100 index, I think it's important to take a look into the methodology and see exactly how this works, how stocks are added or maybe not added. And to be honest, for anyone holding on to SCHD, I think it's very important to know some of these facts if you are going to hold on to this ETF long term. So the methodology says Dow Jones US Dividend 100 Index Universe. The index universe is defined as the constituents of the Dow Jones US Broad Stock Market Index, excluding REITs. So even though REITs are great, I'm a huge fan of REITs, they are not going to be included into this index. It then says stocks must pass the following screens: minimum 10 consecutive years of dividend payments, minimum FMC of US 500 million, minimum 3-month ADVT of $2 million US. Stocks passing all three screens are ranked in descending order by IAD yield, defined as the stock's IAD, not including any special dividends, divided by its price. The top half of securities based on its rankings are eligible for stock selection. The reference date for dividend payments history is the last business day of December, while FMC and ADVT are as of the last business day of February. Now the index construction, also very important. Constituent selection is as follows. The eligible securities are ranked by each of 4 fundamental base characteristics. Things like free cash flow to total debt, annual net cash flow from operating activities divided by total debt. Companies with 0 total debt are ranked first. Then return on equity, annual net income divided by total shareholder equity. Then IAD yield, and then 5-year dividend growth rate, defined as this equation below. It then says the 4 rankings are equal weighted to create a composite score, and the eligible securities are ranked based on the composite score. The top 100 ranked stocks by the composite scores are selected to the index, subject to the following buffer rules that favor current constituents during the annual review, which are the constituent stocks will remain in the index as long as they are among the top 200 rankings by the composite scores. So even if a stock doesn't rank as high, as long as it's already in the index, it could still stay. Non-constituent stocks are added to the index based on their rankings until the constituent count reaches 100. If 2 non-constituents have the same composite score, the non-constituent with the higher dividend yield will be selected. And then as far as the weighting goes, it's pretty simple. It says stocks in the index are weighted quarterly, based on a capped FMC weighted approach. No single stock can represent more than 4% of the index, and no single global industry classification standard sector can represent more than 25% of the index, as measured at the time of index construction, annual rebalancing, and quarterly updates. So once again, I repeat, for anyone out there that's holding onto SCHD, to understand how the formation and some of the rules of the index that SCHD tracks is very, very important to be aware of. But I want to hear what you guys think down below when it comes to the Schwab US Dividend Equity ETF. Are you currently buying more shares of SCHD as of now, or have you lost all hope when it comes to this popular dividend growth ETF? If you enjoyed this video, make sure to please drop a like down below and subscribe for more content like this in the future. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.